Meta, also known as Facebook, is down 29% since the beginning of the year. Meta reported earnings this past week and their stock dropped 25% in one day. In fact, Meta lost $238 billion in market cap in one day, making it the largest one-day loss by any company ever in history of the stock market. If you are curious which companies had the biggest one-day losses in history, you can check out this chart here. Out of the 10 biggest drops in history, Apple represents 5 of those drops, while Facebook represents 2 of them. Many investors are wondering if now is the time to buy Meta stock. So in this video, I'm going to take you through their most recent earnings report and dissect everything that happened. I can tell you right up front, there are some really good things that happened in the quarter, and there are some concerns for Meta in the future. I will also provide my updated intrinsic valuation on Facebook to see if there is currently any margin of safety based on my findings. Hi everyone, if you are new to my channel, my name is Justin Lindering, but my friends call me J Money. People wonder where that nickname comes from and actually stems from my previous job. I've been an accountant for about 20 years, and at my last job I was literally the entire accounting and finance department because it was a small company. Since I paid all the bills, handled all the payroll, I was dubbed the name J Money and has stuck ever since. Full disclosure, I am a shareholder of Facebook stock, so I wanted to make sure I did my full due diligence on the latest earnings before I filmed this video. The best investors in the world have the ability to remove emotion from stock picking, but it is hard not to have any emotion when you see one of your stocks drop 25% in one day. So what the heck happened to Facebook? For that, let's turn to their earnings report. Facebook posted $34 billion in revenue for the fourth quarter, which is a 20% increase year over year. This means Facebook posted full year 2021 revenue of $118 billion, which is 37% higher than in 2020. So quite impressive numbers. In fact, this is the first time the company has ever posted $100 billion in revenue in 1 year. From here, things get a little sour. Facebook posted $13 billion in operating income for the fourth quarter and $39 billion for the year, which is a decrease year over year of about 1% for the quarter, but is an increase of 35% for the year. Net income dropped by 8% for the quarter compared to last year, posting positive income of $10 billion. For the year, Facebook had net income of $39 billion, which is a 35% increase year over year. Earnings per share for the quarter came in at $3.67 compared to $3.88 from last year. Still, for the year, the company has a positive EPS of around $14. The company ended the quarter with $48 billion in cash and short-term investments. That means the company has seen its cash position decrease by $14 billion over the last 12 months. The company has also spent $19 billion on CapEx over the last year. Free cash flow came in at $12.5 billion for the quarter and $37 billion for the year compared to $23 billion in the prior year. To summarize, sales and free cash flow were really good, but operating income and earnings were a disappointment. However, Meta only missed earnings projections by 4%, so a stock drop of 25% seems unwarranted on the surface. But there's more to this story. Whenever I'm reviewing Facebook's progress, I always like to look at how many active users they had on average each day and also for each month across their platforms. This gives me a good idea if Facebook is losing people on their platforms or if they're gaining people. For Q4, Facebook announced their DAP, which stands for Daily Active People, came in at 2.8 billion users, which is an 8% increase year over year. This encompasses their entire family of products such as Facebook and Instagram and WhatsApp. However, there's a slight drop quarter over quarter, so it is odd to see it go down because we have always seen the total users climb each and every quarter, but keep in mind total users over the year were up. When I think about Facebook, they have pretty much saturated the market with their platforms. When you have almost 3 billion users, which is equivalent to 50% of the entire world, they are going to have a hard time growing the user base I'm sure there are some parts of the world Facebook has not penetrated yet, but I think for the most part, they have a presence in all first world countries. Something that is extremely important to me is average revenue per user, because even if the total users stay relatively the same or go up slightly, the company can still generate more ad revenue each year by increasing it on a per user basis. And that is what I've seen in the past and continue to see for Q4. Facebook posted $11.57 of revenue per user compared to $10.14 last year, which is a 14% increase. Another thing that I like to look at is the makeup of Facebook's products and how much operating income they generate. For example, in 2021, Meta's three big platforms, Facebook, Instagram, and WhatsApp, generated operating income of $57 billion, but their Reality Labs segment, which is the virtual reality division that is made up of Oculus and the Metaverse, lost $10 billion in operating earnings for the year, so that is a big difference. I think this is one of the issues that the market is having with Meta right now. Mark Zuckerberg comes out last October, completely rebrands the entire company, changes its name to Meta, and then tells the whole world they are making a huge pivot to the metaverse. I mean, their name clearly refers to the metaverse, and that part of their company lost $10 billion last year. That is not a good look. This is the first time we really get to see the breakdown of that division, and it just does not look good when Reality Labs has sales around $500 million, but the loss was around $10 billion. That definitely scares investors. However, the company did buybacks about $19 billion, and the company announced last year a new share buyback program. So I would hope they would spend a lot of that this upcoming quarter with their stock down 29%. So we've already talked about two negative things with the earnings miss and the operating loss for Reality Labs segment. Now let's talk about a third one, and most important in my point of view. The CFO of Meta came out and announced lackluster guidance for Q1 2022, citing ad revenue growth between 3 and 11%. That is a significant drop from what we have seen in the past and very concerning. So why the big drop in revenue? Well, the company pointed right at Apple with the recent iOS changes that won't allow Facebook and other platforms to track what people are watching on their phones. Company use this type of information to tailor their ads specific to their users and hopefully get them to click on the website or items to buy. This is a potential headwind not only for Facebook, but many other companies like Pinterest, Snap, Google, and more. However, what is interesting is that Pinterest, Snap, and Google all just reported stellar numbers, and their concerns around Apple changes is not as predominant like it was mentioned for Facebook. I find this extremely interesting. Facebook management is notoriously sandbagging their numbers and has painted the future as bleak. I believe this is strategical in nature that they've done this in the past. Facebook, along with the other big tech companies, are constantly defending themselves. So if you're always saying, woe is me, for the future, it might help deter the government. But is this truly sandbagging like we've seen in the past, or has Facebook just lost its touch? I think Facebook is reaching a pivotal time in its history. If you look at the other FANG stocks, Facebook has been the worst in capital allocation, while Amazon and Microsoft have been arguably the best. Amazon, for example, takes all of its free cash flow and puts it right back into its business through acquisitions, creating new revenue streams such as shipping and so on. I am always amazed at how many companies that Amazon owns when I review their quarterly earnings report. It is about 2 pages long of all the companies they acquired over the years. However, with Facebook, they just sit on their cash and they don't really reinvest it or add to their business model. Sure, they added Instagram and WhatsApp, but they have consistently sat on tens of billions of dollars of cash for years. That is changing now with the metaverse. The company is going to dump a ton of capital into this expensive venture. The issue is that no one really knows what the price tag is going to be. What we do know is they had sales about $500 million for the Reality Labs division last year, but that certainly is not going to cut it. So what does this all mean? Where does Facebook go from here? What is the intrinsic value of the company at this point? When I look at the company like Meta that is trying to change the entire direction of the company, I have to believe in the CEO. Zuckerberg is disliked by many, but I have an admiration for the guy. Not too many people in this world that, can take an idea and turn it into a $1 trillion company. After all, Zuckerberg has more money than he can spend an entire lifetime and doesn't even have to work another day if he doesn't want to. But he likes what he does, he loves Facebook, and he loves to innovate. He is a true entrepreneur in my mind. There are a ton of doubts by the media and the market that Zuckerberg can be successful with this new pivot. It will ultimately be on him if this is going to succeed or not. Meta needs to continue putting capex into the metaverse. They are projecting between $29 billion and $34 billion of capex in 2022, which is lighter than I expected. This will need to increase in the future. The great thing is that Meta has robust free cash flow from their legacy business, which will support this massive cost. As far as valuation goes, I'm going to be very conservative in my assumptions. Using my discounted free cash flow model, I am assuming Facebook's free cash flow is going to decrease over the next 10 years due to these higher capex requirements for the metaverse. I am estimating their free cash flow to drop to around 10% per year over the next 6 years and then drop to about 7.5% from years 7 through years 10. I also am assuming that Facebook's future multiple will drop to a value of around 18. This does not take into consideration any earnings from the metaverse in the future. Based on these assumptions, I believe Meta is worth around $380 a share, which is about 40% margin of safety as of today. So it does look really attractive, but Facebook has historically traded at a lower multiple than the rest of the market and certainly compared to other FANG stocks. For Facebook, everything is riding on the metaverse. If it works out, Meta could be trading at a multiple 40 in the future, but if it doesn't work out, Meta could be reduced to a multiple, say around 15. Before I invest in a company that has gone through a negative event like Meta, I always ask myself one question. Does this event cause risk or uncertainty, or does it cause both? It's very important to discern between risk and uncertainty. Risk could mean the stock doubles or the stock goes to zero. Risks are known. Uncertainty, on the other hand, is not known, or there's a lack of certainty of the outcome. Each investor may look at the same event differently. In the case of Facebook, I believe is 90% uncertainty and 10% risk. The risk mainly comes from the potential failure of the metaverse and how that would impact Facebook and Zuckerberg's reputation. However, I think the risk is low overall in my opinion. It is heads, I win. Tails, I don't lose much. What if the metaverse doesn't work out? Meta still has a reputable legacy business that generates a ton of free cash flow, and Zuckerberg will just try something else. I also have serious doubts that Facebook won't figure out the Apple privacy headwinds, and I don't think it's going to impact the business as much as management is leading on. But I'd love to hear from you. What do you think about Facebook? Is it a time to buy now? Do you think this investment is more risk or more uncertainty? Thank you so much for watching. I really appreciate it. I'll catch you on the other side. Take care and God bless.